Hello everyone, welcome to Brilliant Banglers, your one-stop solution for all IFBF exams. Today we are going to dive into the chapter Liberalized Remittance Scheme, which is a part of the bank financial management exams conducted in CAIIB exams. So what is Liberalized Remittance Scheme or the LRS? It is a step taken for the simplification of foreign exchange facilities and with a view to provide suitable opportunities to resident individuals in the light of the changing scenario. If an individual from India would like to invest any money abroad and for his uses while he is traveling abroad, or for any medical expenses abroad, or for any maintenance of any relatives abroad, for all these things, always the cash is to be sent outside India. So this is what is a liberalized remittance scheme. Under the liberalized remittance scheme, all resident individuals, that is including minors, are allowed to freely remit up to US $250,000 per financial year for any permissible current and capital transaction or a combination of both. So each and every individual is allowed to remit a maximum of 2,50,000 US dollars in a financial year. In this, it can be of a capital account type or a current account type. What is capital account and what is current account? Capital account is the investment in assets or shares abroad. What is current account? It is like the day-to-day expenses for traveling, the medical expense, the maintenance of a relative. These are all the current accounts. So a person can spend up to a maximum of 2,50,000 US dollars per financial year, either in any of the accounts, either in a current account or a capital account, or combined in both. It is regulated by RBI under the FEMA Act 1999. What are the objectives of the LRS? It allows Indian residents to diversify their investment globally. It facilitates them on spending in foreign travel, education, and medical treatments abroad. It also encourages international financial planning and portfolio diversification of individuals who like to invest in different shares and companies. I think you're finding the video useful. Please do subscribe for more videos and also press the notification button so that you get notifications on the upload of each and every video from our channel. What is the eligibility? Eligibility for LRS. He should be an Indian resident and he should be an individual. He or she should be an individual. Only individuals, even if the individual is a minor, are eligible to carry out current and capital account transactions. Corporates, partnership firms, HUFs, trusts, and NRIs are not eligible for a liberalized remittance scheme transaction. Coming to capital account transaction. As discussed earlier, it has been defined in Section 2 of the FEMA Act. Capital account transaction means a transaction which alters the assets or liabilities, including contingent liabilities, outside India of persons resident in India, or assets or liabilities in India of persons resident outside India. So what does this mean? If a resident individual, by investing abroad in the equity of an overseas company, obtains shares allotted in his or her favor, resulting in creation of a asset outside India. If an individual is purchasing shares, purchasing some kind of property, all these are counted in a capital account. What is a current account? It has been defined in Section 2J of the FEMA Act, which means a transaction other than capital account. So any transaction which is not a investment is a current account transaction, which includes any transaction connected to trade, interest on loans, and income on investments, expenses connected to travel, family maintenance, and medical treatment. So we'll be going through some of the key sections of the FEMA Act 1999. I have given only the points. We will be discussing it in detail. Section 4, no purchase of property. This means that no person resident in India shall acquire, hold, own, possess, or transfer any foreign exchange or any foreign security or any immovable property outside India unless it was acquired while being a non-resident. So a person who is resident in India, he cannot do all these things. What? Acquire, hold, own, possess, or transfer. The forex he is holding to any other person. One thing, he was having some forex, he can't transfer it. He can't transfer his property to any other person unless all these things were acquired by him when he was a non-resident individual. Sell or draw forex. The authorized dealers are permitted to sell or draw forex. Any person may sell or draw foreign exchange to or from a authorized dealer for a capital account transaction, for purchase of property, or any type of capital account transaction. Any person may draw the foreign exchange from an authorized dealer, and the remaining is to be sold back to them. Any class or classes of capital account transaction which are permissible, and the limits to which such transactions are permissible as per the exchange regulations of the Act. What is Section 10(6)? It is a utilization of forex. Any person who has acquired or purchased foreign exchange does not use it for the purpose or does not surrender it to the authorized persons within the specified period. If such foreign exchange is not used or uses for the foreign exchange so acquired or purchased for any other purpose is not permissible under the law. If Mr. A, he wants to go on a tour to Europe and he has done a foreign exchange for some amount. If he is using the same amount for the maintenance of his relatives in Europe, so it is a contravention of that. This is what is being said in section 10(6). Section 11. RBI may authorize RBI may authorize persons any directions with regard to making payment or desist from doing any act relating to foreign exchange or the foreign security with regard to furnish such information in such a manner as it deems fit. If there is any failure, filing any returns impose penalty also, which may extend up to rupees 10,000, and in case of continuous contravention, there will be additional penalty which may extend to rupees 2,000 every day. Other than this, in section 13, the contraventions has been clearly explained as if any person contravenes any of the provisions or contravention of any rule or regulation of the notification, then he shall, upon adjudication, be liable for a penalty up to 3 times the amount involved in such a contravention, where the amount is quantifiable. If the amount is quantifiable, so he may be fined for about 3 times the amount. And if the amount is not quantifiable, then the maximum fine that he will be paying is 2 lakh. And again, If he is continuing the same thing or repeating it again, then the fine may be extended to 5,000 rupees per day. So what are the permissible and non-permissible remittances under LRS? It has been explained in Schedule 1, 2, and 3 of the FEMA Act. Schedule 1 deals about the non-permissible remittances or the remittances that are prohibited. Schedule 2 deals with the remittances that are permissible, subject to approval of the respective government departments or ministries. And Schedule 3 is permissible under the delegated powers of the authorized dealer. So I'll be telling you about the Schedule 2 first, which is permissible subject to approval of the government or ministry. In any case, you are going on a tour to any country on a historical tour. So this becomes a cultural tour. In that case, you have to take permission from the Ministry of Human Resource Development. That is, for remittances through cultural tours, you take permission from the Ministry of HRD. If you have to go for any advertisements in a foreign print media by any state governments or the PSU undertakings, in that case, you have to take the permission of the Finance Ministry. Remittances through freights of vessels chartered by PSUs. The permission is from Ministry of Surface Transport. Payment of imports through an ocean transport. It's again from the Ministry of Surface Transport. If there is any remittances of hiring charges of the transponders by TV channels, internet service providers, etc., the permission is to be taken from Ministry of INB and the Ministry of IT, Ministry of Information and Broadcasting, and the Ministry of Information Technology. Coming to Schedule 3, what are the remittances for resident Indians that are permissible under the delegated powers of the authorized dealers? Any person who wants to visit any country other than Nepal and Bhutan is allowed. Gift or donations, going abroad for employment, immigration, maintenance of his close relatives, travel for business by any resident individual. These are all the things that are coming under Schedule 3. Now we are going to Schedule 1, the things that are non-permissible. Like remittances for margins or margin calls to overseas exchange or overseas counterparties. This is not permissible. Payment of commission on export. If you have to pay a commission on your export to a company or to a person abroad, that is not allowed. Remittances towards banned or proscribed magazines. There are few magazines that are banned in India, and if you are going to remit for the prescription of those magazines, it is not allowed. Remittance of dividends by any company to which the requirement of dividend balancing is applicable. If there is any lottery winnings, then the remittance for purchase of lottery tickets. And any other income from racing, riding, or any other hobby is not permitted to be settled abroad. We will be going for a detailed class in all the schedules in the upcoming slides. What are the operational guidance? I think you're getting something fruitful in this class. I would request you to subscribe the channel. Operational guidance. What are the requirements for a LRS, Liberalized Remittance Scheme remittance? Each and every person should have a PAN. The terms and conditions should be as per the Schedule 3, which for any permissible current or capital account transaction or a combined both. AD Bank has to frame the appropriate guidelines for the customer interface to ensure case of transactions within the ambit of the regulatory provisions. Customers should designate a branch of the bank through which all remittances are to be made, especially with regard to the capital account transactions. Transactions freely allowed up to a overall limit of US dollars 2,50,000 per financial year. There is no restrictions on the frequency of the remittances in the financial year. You can remit any amount, any time, any number of times in a financial year, but the maximum limit that can be remitted is 2,50,000 US dollars. If a sole proprietorship firm intends to remit the money under LRS by debiting its current account, then the eligibility of the proprietor in this case is as an individual, and it is not a proprietorship firm. Here, an individual is remitting money. Card transactions. All international credit, debit cards, and ATM cards can be used for current account transactions. In the case of employment or deputation, citizens of a foreign state other than that of Pakistan, other than that of Pakistan, and resident in India on account of employment or deputation, or a specified duration, or for a specific job or assignments. For example, people who are deputed to the embassies, the duration of which does not exceed 3 years, is a resident but not permanently resident. Such individuals are eligible to make remittances under the LRS subject to the deduction of taxes, his or her contribution to the Provident Fund, and other deductions, whichever is available. Any amount in the LRS limits requires prior approval from the RBI. AD banks should obtain the bank statement and also carry out proper due diligence of the customers, wherein he should have a proper know your customer format. They also have to get the bank statement to check out what is the funds in and funds out criteria of the person. This is mainly to identify the source of funds of the customer who has just logged in. If there is no availability of a bank statement of the previous 1 year, a ITR return is to be taken from the same person. So, what are the documents that are required for carrying out a LRS transaction? For carrying out a LRS transaction in a current or a capital account, a Form 2, which is a declaration under the FEMA Act, it is to be updated and which is available online. The simplified documents for individuals. Simplified documents are made ready for individuals who are only going to transact for an amount of US dollars 25,000. The customer who is approaching for LRS should declare his source of funds. He should have a PAN card, or he should have a copy of the confirmed ticket and visa if he is going to travel abroad. Or the payments can be done to the tour operators, where the tour operators can collect the amount from the resident individual either in the Indian rupee or in a foreign currency, in which case the tour operator can open a special foreign currency account with a bank in India. TCS, whichever is applicable in respect of release of exchange by tour operators, irrespective of their threshold limits, is to be deducted. In this case, the TCS for tour operators, there is no threshold limit for deduction. Automatically, the TCS is to be deducted. We'll be coming to the TCS heading later on, but this is a main point which is to be noted. What are the remittances under the current account transaction? This was already discussed, but we are going deep into it now. A private visit to any country. If a person wants to visit any country other than Nepal and Bhutan, in that condition, irrespective of number of visits undertaken in a financial year, cash towards the release of exchange can be accepted. Cash towards the release of exchange can be accepted up to rupees 50,000, beyond which transaction to be routed through a account only. So if a person wants to travel abroad to any other country other than Nepal or Bhutan, in that case, a maximum cash that can be remitted in a bank is rupees 50,000, for which he can get an exchange of the foreign currency. Foreign currency notes may be released up to limits prescribed only. Unutilized foreign currency or the foreign exchange is to be surrendered to the AD within 180 days from the date of his return to India. A person visits any European nation or he goes to UAE and comes back after the business or the tour or any medical facilities that he wanted to attain over there. He does have a few foreign exchange or foreign currencies in his hand. So what should he do? He should remit the same by the 180th day of his landing back in India. Gift to persons resident outside India. Yeah, sorry. Before this, we will have a small discussion about what are the amounts and released in the form of foreign currency notes for particular things. If a person is traveling on a Hajj pilgrimage, then the instructions are issued by the Hajj Committee of India. As and when each and every year, Hajj Committee of India issues instructions carry the foreign currency. Travelers who are proceeding to Islamic Republic of Iran or the Russian Federation may release whatever notes they want. The amount they have, the full amount can be taken. Travelers proceeding to Iraq and Libya are handed over a maximum of US dollars 5,000, and to any other countries it has been restricted to US dollars 3,000. Coming to the second part, what is gift to a person who is resident outside India? And who are these persons? Any relative of a person as defined in the Companies Act 2013. He can be given a gift. So who are all they? If that relative is a member of the HUF, if that relative is a husband and or a wife, husband gifting a wife and a wife gifting a husband, is one person who is related to the other as prescribed under the Act. So who are all the persons who are described under the Act? The persons are father, also a stepfather, mother, including a stepmother, son, including a stepson, daughter, daughter's husband, brother, including stepbrother, sister, also including a stepsister, etc. In this case, a stepdaughter is not a relative. Stepdaughter is not a relative. Immigration, as prescribed by the country of immigration. The rules for immigration to carry the amount is as per the country of the immigration. Foreign exchange beyond US dollars 250,000 may be released if it is required by the country of immigration for meeting any incidental expenses in the country of immigration, subject to suitable documents submitted by the individual to the satisfaction of the AD bank. He can carry money while going abroad for his employment. The same is the condition for the maintenance of close relatives abroad, which is defined under Section 2 of Companies Act. What is a gift and what is maintenance? Gift is something that you give, and maintenance, what you pay for maintenance is the money that you're giving for their self care. If he is going to purchase objects of art for personal purposes and not connected with any trade or commercial purposes, if he is on a business trip for attending conferences or any specialized training, in all these conditions, he can go for a LRS. Expenses in connection of the medical treatment. Authorized dealers may release in foreign exchange up to an amount of US dollar 2,50,000 without insisting on any estimate from the hospital or a doctor. For any amount exceeding the above limit, the authorized dealers may release foreign exchange under general permission based on the estimate from the doctor in India or a doctor abroad. The person who has fallen sick after proceeding abroad may also be released foreign exchange by an authorized dollar without seeking prior approval of the Reserve Bank of India for medical treatment outside India. In addition to the amount, an amount of rupees, an amount of US dollars 2,50,000 per financial year is allowed to a person for accompanying as an attendant to a patient going abroad for medical treatment or checkup. So what does this explain? A person, he can take US dollars 2,50,000 for his medical treatment. If in case there is a higher requirement, so on a certificate or after referring a certificate from a hospital or a doctor in India or abroad, an additional amount of US dollars 2,50,000 may be again given to the person. So the maximum limit comes here is 5 lakh. For studies abroad, foreign exchange beyond 2,50,000 may be released if it is required by the university where the admission is secured, subject to the suitable documentary evidence submitted by the individual to the satisfaction of the AD bank. So what is TCS? Tax collection at source. The Finance Act 2020 has a new insertion in the Income Tax Act on TCS at 5% of LRS, which was with effect from the 1st October 2020. The Finance Act 2020 had a new insertion in and said that any remittances of LRS will apply a TCS of 5%, and that is with effect from 1st October 2020. Now, in the budget of 2023, there has been a new change, and it has been added as 20% of TCS with effect from 1st October 2023. So, if there is any transaction, LRS transaction, Liberalized Remittance Scheme transaction above a certain limit, then the TDS for it is flat 20% from 1st October 2023, and it was 5% earlier. So, while attending the exam, please go through the question deeply. What is being asked? Is it October 2020, October 2021, or October 2023? Please check the dates. What is the limit of the financial of transaction per financial year? It is 7 lakh rupees per financial year. Any amount exceeding 7 lakh rupees will come under the TCS provisions. If the person who is remitting money doesn't have a PAN or Aadhaar, a 10% TDS will be deducted from him. Transactions involving transfer of domestic rupee account to the NRO account under LRS. In this condition, all transactions are not allowed, and any transaction that is being remitted from the NRO account will be deducted with the TCS provisions. Education loan. In the case of education loan, if the loan is taken from education, in the case of education, if the remittance is for education purpose and the source of fund is from an education loan, then a TCS of 0.5% will be deducted above 7 lakh rupees. These are the things of the TDS. Please have a screenshot of this picture of the screen. It will be of useful later. So what are the remittances under the capital account? We have already seen the current account. Now what are the remittances under capital account? The remittance to IFSCs, International Financial Service Centers. What is an International Financial Service Center? You would have heard about special economic zones in different cities all over India, nearby metros, nearby metropolitan cities. Even there are few SECs in cosmopolitan cities also, near harbors. So what is the specialty of a special economic zone? Special economic zone gives a provision of exporting things or importing things to that zone without any export or import taxes charged by the country. But if anything from the special economic zone is transferred to the town in which that is situated, so there is a import and export charges. So people or any individual can invest in the special economic zone. That is through the international financial service centers. To go deeply, with a view to deepen the financial markets in the IFSCs, an opportunity is provided to the resident individuals to diversify their portfolio, wherein residents are permitted to make remittances under LRS to IFSCs, which is set up in India under the Special Economic Zone guidelines. The following provisions need to be adhered by the resident individuals on doing so. The remittances shall be made only for making investments in IFSCs, in securities, other than those issued by entities or companies resident in India, which is outside the IFSC. For example, Tata Motors is having an office or a small company in the SEZ. In that, you can invest because that is a company resident in India. Opening of a non-bearing foreign currency account in IFSC is permitted for making the above permissible investments under the LRS. Any funds which is lying idle for more than 15 days from the date of credit into the account shall be immediately repatriated to the domestic INR account of the investor. So what are the remittance of capital account nature? Opening of foreign currency accounts abroad for the purchase of immovable property, making investments in the form of acquisition and holding of shares, acquisition of debt instruments, acquisition of qualification shares of an overseas company to become a director, acquisition of shares of a foreign company towards provisional services rendered or in lieu of the director's remuneration, if he is holding any units of mutual funds or VC funds, unrated debt securities, and promissory notes, etc. These are the things for which remittances of capital account nature can be made under LRS. What is remittance under overseas direct investment? A resident individual may make overseas direct investment in the equity shares and compulsorily convertible preference shares of the joint ventures. This is as per FEMA notification. So direct investment outside India, what is meant by that? It is an investment by the way of contribution to the capital, that is purchase of shares, subscription to the memorandum of association of a foreign entity. Again, all these things is, how do you subscribe for a share in India? By investment or the initial or the IPO subscription or purchasing of existing shares of a foreign entity either by market purchase or private placement or through the stock exchange, but does not include portfolio investments. So if a person is going to invest in a share in the Nasdaq, it is a overseas direct investment. And a resident individual is prohibited from making direct investments in a JV which is engaged in. So in Indian or a resident individual cannot make an investment in real estate business, banking business, or in a business of financial service activities. Investments can be either in a listed company or an unlisted company or a combination of both, subject to a maximum overall limit for an all purpose put together of 2,50,000 US dollars. Loan to NRA close relatives. Loans can be provided to NRA close relatives in few conditions in which the loan is to be free of interest. The minimum maturity period of the loan is to be 1 year, and the loan shall not be utilized by the close relative for chit fund business or nidhi funds, or it is not to be used by them for any agricultural, plantation, or real estate activities, or construction of farmhouse, or trading in TDRs, time deposit receipts. The proceeds may be credited to the NRO account of the NRI. The loan amount shall be remitted outside India, and the repayment shall be from inward remittances or transfer from the NRO, NRI, or the FCNR accounts of the relatives. So, what are the reporting requirements? The reporting requirements has been amended by RBI, and the latest is with effect from the April 2018. A daily reporting scheme system by the AD banks of transaction undertaken by a resident individual and has been put in place by the RBI from 2018. What are they? ADs are required to upload the daily transaction information undertaken by them under the LRS. The reporting of daily transaction are to be reported on the XBRL platform by close of business on the next working day. Nil report, if any, is also to be submitted on a particular business day. The data on such daily reporting is to be made available to all AD banks. So here we sum up what we have gone through today. So what is LRS? The remittance under LRS is a facility wherein a resident individual can avail foreign exchange to a maximum of 2,50,000 US dollars in a financial year for all permissible purposes under section 3. It's schedule 3 of the remittances. KYC compliance of resident individual, including minors, need to be complied, along with the remitter declaring the source of the fund to the satisfaction of the authorized dealer. The authorized dealer bank to analyze details of credits into the account during the previous period and ensure that the remittance is in compliance with the guidelines. All funds in and funds out in the account during the previous period need to be checked to ensure all the anti-money laundering guidelines are complied with. A second check of the transactions before effecting the remittances in respect of high value transactions is to be carried out. on monitoring, and if it is identified that there is a STR, suspicious transaction report, is to be raised. Post facto monitoring on the transaction with regard to compliance and submission of related information and regulatory reporting requirements in the same in subject or in respect of the capital account transaction is to be done. I hope today's class was useful. If you do have any questions, you can ask it in the comment section, for which we are eagerly waiting to reply. Do subscribe our channel, do like, share the contents to your friends and people who are interested in writing the bank exams. Thank you. Jai Hind.